The next Bitcoin halving is coming in April 2024, and historically this has led to the beginning of a new raging bull market. But will this Bitcoin halving be like the others and send BTC to the moon, or has the market fundamentally changed? Hi everyone, and welcome back to the Virtual Bacon channel, where I teach you how to build wealth with crypto. At the end of last year, I made a video calling for when and where we'd see the Bitcoin bottom, and I was pretty spot on. I predicted Bitcoin would bottom between 12K and 19K, and it would happen by the end of Q1 of this year. While I didn't get the exact bottom price and the exact date, I was able to use the history of Bitcoin's price action to form an educated guess, and it played out pretty well. Make sure to check that video out for some of my other Bitcoin predictions. The link is in the description. And want to know how I call the end of the bear market? Well, my number one indicator is to follow the Bitcoin cycles by understanding the Bitcoin halvings. Bitcoin halvings have played a major role in Bitcoin's price action every cycle, which typically lasts around 4 years. So today we'll cover the 2024 Bitcoin halving and the effects it could have on the overall crypto market. I will also give you my personal investing strategy to play around the Bitcoin halving and my latest Bitcoin price predictions. Let's first get clear on what the Bitcoin halving is and why it's important. Bitcoin halving events are closely related to the Bitcoin mining rewards, which is when people use their computers and mining hardware to solve cryptographic puzzles and help validate Bitcoin transactions. In return, they get a certain number of new Bitcoins for every block they create. Now, this reward number is set in the Bitcoin software, but because Bitcoin has a limited supply, we cannot print an infinite amount forever. This is why every 4 years or so, the Bitcoin rewards distributed per block gets cut in half, hence the reason we call it the Bitcoin halving event. When Bitcoin first went live in January of 2009, each block gave a reward of 50 new BTC. So far, there have been 3 Bitcoin halvings, and today the miners get 6.25 BTC per block. But once we have the 4th Bitcoin halving next year, miners will get 3.125 Bitcoins, and this trend will continue until the final Bitcoin is mined in just over 10 years. Halvings have played a major role on Bitcoin's price because of their effects on supply and demand, so let's take a deeper look. Bitcoin's total supply is capped at 21 million BTC. And in its early days, Bitcoin creator Satoshi Nakamoto needed a way to incentivize miners to help validate Bitcoin transactions. When nobody wanted to use the network yet, this was very difficult, hence why there was a large amount of BTC given away to the miners. However, as the demand grew, the network needed a way to slow inflation and create scarcity. The way Satoshi designed this is to let 50% of all Bitcoins get mined, then cut the inflation rate for the next 25%, then cut it again for the next 12.5%, etc. So in Bitcoin's first 4-year cycle from 2009 to 2012, 50% of the entire supply has already been distributed, which equal to 10.5 million Bitcoins added to the supply. Then in the second cycle, another 25% of the supply was mined. And by the end of this current cycle, which ends in April 2024, 94% of all Bitcoin will already be in circulation. This shows that Bitcoin's supply is growing at a logarithmic curve, which slows down more and more as time goes on. But the big thing to note is that when the number of new coins added starts to slow, it also slows the amount of sell pressure that miners have. Bitcoin mining is not cheap, as these operations need to spend millions of dollars in electricity to run their machines. On top of this, they also have to constantly upgrade their mining hardware in order to stay competitive in the market. So Bitcoin miners have to constantly sell their newly mined coins to pay bills. In the current cycle from 2020 to 2024, mining has added 1.3 million new Bitcoins to the circulating supply, while in the 2024 to 2028 cycle, we will only get 650,000 new Bitcoins. At today's price of 30K per coin, that would equal $20 billion in sell pressure that automatically gets taken out of the equation in the next cycle. Now, there are many more nuances that play into the supply and demand of Bitcoin. There are things like the stock-to-flow model, which calculates the scarcity of Bitcoin based on its percentage inflation rate, or the hash ribbon indicator that is used to determine the shrinkage or expansion of Bitcoin miners' activity. We will cover these in depth in a part 2 video to use them to predict Bitcoin's future price, so subscribe to the channel to not miss it. For the purpose of today's video, we just need to understand the Bitcoin cycles. So you just need to know that Bitcoin becomes much more scarce after its halving event, which happens every 4 years. This effect has consistently led to the price increase of BTC from one cycle to the next. If you want to gain exposure to Bitcoin without worrying about the bull or bear markets, check out today's sponsor, Pionex. Pionex is the first crypto exchange that offers easy-to-make trading bots using ChatGPT. Just describe your strategy in plain English and it will generate the trading bot code for you ready to use in TradingView. For example, if you want to take advantage of the current sideways market, you can use the grid trading bots on Pionex. This type of bot is designed to buy the lows and sell the highs within its sideways market range. If you're unsure about which type of trading bot to use, Pionex also has a GPT marketplace with pre-built strategies made by experts. For instance, I really like this MA cost strategy, and it's one I have been trying, which uses the short-term higher highs and higher lows and moving averages to determine if Bitcoin is in an uptrend. This helps reduce loss during a sideways market, but it also jumps in when the market starts trending up. If you're interested, sign up to Pionex with the link in the description, and you can also receive a $1,000 sign-up bonus. Now that we know how Bitcoin's tokenomics are about to change, let's look at the timeline for how I'm going to invest around the halving event. Each Bitcoin cycle can be broken down into 3 different phases. The first 1.5 to 2 years after a Bitcoin halving is usually the most bullish time of the cycle. We can see this very clearly in the 2021 bull run and the 2017 bull run. Then the cycle tops out around the 2-year mark, and then in the 3rd year of the cycles, these are the most bearish times. 2018 and 2022 were the most brutal years for Bitcoin and the whole crypto space. Then in year 4 comes the bottom, which usually happens after months of boring sideways action, and by the end of the 4-year cycle, markets usually recover to a pre-crash level, but will remain relatively calm and not make a new all-time high right away. This is the core reason why I was accumulating at the end of last year and in Q1 of this year, as we were going into the 4th year of the Bitcoin cycle. Barring any crazy announcements like a collapse of a major exchange or a major ruling from the SEC, I don't expect us to go back to the sub 20k levels we saw in this past crypto winter. Now, looking ahead, one of the major announcements I want to keep an eye on is the Bitcoin spot ETF that BlackRock has just applied for in the middle of June. If you've been around crypto for more than one cycle, you know that getting a Bitcoin spot ETF has been a 10-year-long dream of the entire space. But it has been rejected over 30 times thanks to the SEC and Gary Gensler. While there are other instruments like the Grayscale Bitcoin Trust or other Bitcoin futures ETFs on traditional exchanges, there is a key difference between a spot ETF and a trust or futures ETF. You see, with a spot ETF, each share of the ETF contract is backed by exactly 1 Bitcoin in the issuer's treasury. This is always audited and cannot be manipulated. There also tends to be a redemption feature where you can receive real Bitcoin from BlackRock by giving back the ETF shares, although this has not been confirmed yet with these new filings. On the other hand, the Grayscale Bitcoin Trust or other futures ETFs do not have clear Bitcoin backings. While Grayscale does hold Bitcoin for its trust, its shareholders cannot redeem these coins. So if the company itself becomes untrustworthy, the shares tend to trade at a discount to the real price of Bitcoin. This is exactly what happened when Grayscale was revealed to be affected by 3AC and the Luna collapse. With other futures ETFs, it's even worse. These instruments only track the price of Bitcoin, but they do not need to hold any coins in their treasury. So you lose out on the main benefits of owning Bitcoin, such as decentralization, supply and demand advantages, etc. Bitcoin futures ETFs also have high fees in order to maintain the constant exposure to Bitcoin's price. So they are not fit for long-term holding with large institutions. Okay, if the spot ETF is so amazing, what are the chances that BlackRock will actually get this ETF approved? Well, listen to this. Out of the 576 ETFs that BlackRock has applied for, they've had 575 of them approved, with only 1 rejection taking place nearly a decade ago. BlackRock also manages 1/3 of all ETFs in the US. With this track record and being the largest asset manager in the world, I would be shocked to see BlackRock's ETF being rejected. They definitely know something we don't from the SEC. But this also gives me mixed feelings. On one hand, nearly everyone wants a Bitcoin spot ETF, so institutional investors can come into the space. But the downside is that the US regulators and their Wall Street friends clearly want to push out the crypto native exchanges and control the space. This ETF news came at such coincidental time when Binance was under heavy attack and popular altcoins were marked as potential securities. Having entities like BlackRock, Fidelity, and the SEC control the crypto space in the US is a scary thought. What will happen to other exchanges? What about altcoins that are deemed unsafe from Wall Street? Anyways, at least this clearly will be bullish for Bitcoin. So let's just get to my Bitcoin price prediction. Since we left the Bitcoin bottom lows by the end of 2022, Bitcoin has been on a consistent uptrend since this January. Despite so much heavy FUD such as the attack on Binance and the depegging of stablecoins, Bitcoin's prices still continued chugging along and made higher highs and higher lows. This is honestly a super clear uptrend, and in the days after BlackRock's ETF announcement, Bitcoin surged to the 31K level, and that was just off the announcement of an application alone. If and when the ETF approval becomes official, this could be the first domino to fall and pave the way for large-scale institutional adoption in the United States. But don't get too excited just yet. I really think the bullish sentiment for Bitcoin right now is becoming too hyped too quickly. According to Bloomberg Intelligence, the SEC has a maximum of 240 days to make a decision on BlackRock's new ETF application. So even though I am quite certain this will get approved, the news might not come until February 2024. This timeline matches nicely with the next Bitcoin halving, which comes in April 2024. So the long-term potential for Bitcoin in the next cycle is highly promising, but I am personally staying patient right now. Tons of news and volatility can happen in an 8-month period, so I wouldn't expect Bitcoin to go straight up. Okay, considering all the context, here is my Bitcoin price prediction going into the next cycle. First, we will keep the assumption that the Bitcoin bottom is already in at the 16K mark in Q4 of 2022, as this matches similar patterns of the 2015 and 2019 bottoms, which happened around 1 year after the bull market peaks. 2022 also had the biggest negative events in crypto and macro markets. Luna, Celsius, and the FTX collapses, interest rate hikes. No matter how you look at the markets now, things are in much better conditions. Now, looking forward, I don't expect Bitcoin to make a new all-time high before the halving happens. Look at the last two halvings in 2016 and 2020. Bitcoin price tends to be in a slow grind up for the 1 year leading up to the halving event. And that's the phase we're in now. From a technical perspective, Bitcoin is also meeting a ton of resistance from 32K to 37K price levels, which were the key bull market support levels in the summer of 2021 and the beginning of 2022. I personally think Bitcoin will have a hard time breaking above these levels in the short term. So instead, I'm preparing for more sideways consolidation between the 25K and 35K ranges until Q1 of 2024. And once the Bitcoin halving actually happens in April, here are my best and worst case predictions for the next cycle. Keep in mind, it's hard to predict the precise time for the Bitcoin cycle tops, so we will be using date ranges to be prepared. In the past, Bitcoin has made a new all-time high within the first year after the Bitcoin halving, with the blow-off top happening in November or December. In fact, the last 3 blow-off tops have all happened in the months of November and December. And I expect the trend to continue. With this in mind, I think we should be able to see a new Bitcoin all-time high by the end of 2024, and the bull run could continue until as far as the end of 2025. Now, when it comes to the cycle top prediction, it's really hard to say. My worst case scenario for Bitcoin would be around 70K. If Bitcoin makes a new high but stays there for the entire year of 2024, that would be quite boring, but still within acceptable ranges. But assuming we have a range of positive catalysts coming after the spot ETF approval, leading to institutional adoption and the money printer coming back online, my best case prediction is for Bitcoin to reach 200K. This is about a 3x return from the last all-time high. I arrive at this number based on the diminishing returns of the Bitcoin cycles as the crypto asset class becomes larger in size and more mature. Bitcoin did a 3.3x from the 2018 peak at 20k to the 2022 peak at 66k. During this period, we had the absolute best scenario for a bull market, with massive money printing and crypto becoming a legit asset class. Looking at these factors, it's hard to see Bitcoin outperforming the last bull run's returns. Even if we see huge positive catalysts, I still think a 3x from the previous all-time high is a highly optimistic number. Also, with Bitcoin being at 200k, this gives it a market cap of $4.2 trillion. The overall crypto industry tends to be worth twice that of Bitcoin's, which makes the total market cap of the crypto industry to be worth over 8 trillion. This will put crypto as a serious asset class among traditional investments with a relatively large size. Gold is a $12 trillion market, while private equities is about 11 trillion. For crypto to grow bigger than these mature markets in the short term is quite a far fetch. Lastly, a bit about Ethereum and other altcoins. Bitcoin tends to lead the way for all crypto bull cycles, and for the 2024 cycle, I will also put Ethereum alongside Bitcoin as the industry leaders. Ethereum is worth almost half that of Bitcoin's market cap today, so both of these giants will need to survive and grow for the crypto industry to thrive. When it comes to altcoins, undoubtedly they will get more interest and liquidity when people make profits from Bitcoin and Ethereum. However, it's hard to say if the large altcoins will grow to market caps in the same proportion of Bitcoin and Ethereum. The most popular altcoins like Cardano, XRP, Solana, etc. have all reached close to $100 billion during the last bull market. Will these numbers also do 3 to 5x in the next cycle? Will we see top 10 altcoins being worth hundreds of billions of dollars? Considering these altcoins are arguably owned and issued by central entities and project teams, I have a hard time seeing this. I just can't be putting these large altcoins with a business behind them in the same category as Bitcoin and Ethereum. BTC and ETH are almost like public goods technologies now that can grow as their own asset classes. But for altcoins that are more reminiscent of startups to be worth similar to companies like Visa, LVMH, or Meta, which are all in the hundreds of billions in market cap, it just wouldn't make much sense to me. That's not to say the crypto industry won't grow, but maybe we won't have as dominant large altcoins anymore. And instead, there will be more and more coins in more and more subsectors, just like the equity markets. If you want to see which altcoins I'm buying and my complete portfolio breakdown, make sure to check out my 2023 crypto portfolio video linked in the description. Okay, that wraps up today's video. After months of boring sideways action, I can finally sense a pulse coming back to crypto. And if things start to heat up, you'll want a place to get all of the latest updates on actionable news. You can get all of them before anyone else by subscribing to my free newsletter on virtualbacon.com with over 12,000 friendly readers. I publish a market insight piece every week. Also, follow me on Twitter and Threads to see my day-to-day thoughts on crypto. I drop a ton of unfiltered alpha on there that are too quick for these in-depth videos. Thank you for watching and see you in the next video.